This show is sponsored by Amplify ETFs, delivering expanded investment opportunities for investors seeking growth, income, and managed risk strategies. To learn more, visit amplifyetfs.com.
This is the Amplify update on the Amplify Seymour Cannabis ETF, symbol CNBS. My name is Jay Coulter, and joining me is Tim Seymour, the Chief Investment Officer at Seymour Asset Management, which serves as the sub-advisor to the ETF. Tim, let's get right to it. Tell us what went on in the portfolio in the first quarter.
Hey, Jay, exciting time in the cannabis space. And if you followed the performance of CNBS, you can see we rode up with a lot of great macro and fundamental news in the sector. The industry by mid-February was peaking around expectations of federal cannabis legalization. Profitability from leading players in the industry that really continues to grow, but was part of the tailwind. And then I think as we got from those highs in mid-February into March and into the end of the quarter, I think the industry really ran out of gas. And I think the fundamentals, the irony is that by the end of the quarter, fundamentals were looking very strong into April, but prices had pulled back.
For advisors new to cannabis investing, what's the overall investment thesis, and are we still early?
So cannabis as a sector and as a thematic and portable beta and some of these terms that I think advisors are following in the ETF space, we're very early in the cannabis trade. And I mean, we're early in terms of the development of the industry, the size of the addressable market, the profitability, the subsector development. So people think of cannabis as maybe a consumer product, maybe there's a medical market, maybe it's moving into some kind of a wellness dynamic. But think about all the subsectors below that include retail, distribution, ERP, logistics, technology, software, all those things that are investable subsectors within any consumer products industry. Those are very much still developing. The most important thing for investors to remember about where are you advisors in the overall spectrum of the evolution of investing in this industry is that institutional capital in the form of pension funds, endowments, some of the biggest mutual funds in the world, and possibly even some of the wirehouses or some of the big brokerage houses have not been able to invest in cannabis because of federal restrictions on that, and not because it's not investable in terms of the depth of the marketplace or the sophistication of the company. So the great news for investors here is you're very early. You're very early in terms of the flow of capital into the sector, and I think we're still very early watching a lot of these companies develop, but we're not so early that the dynamics around understanding which companies have real businesses, what the legislative framework. Remember, for cannabis, at one point it was a question of if. Now it's not a question of if. It's not even a question of when. It's a question of how much momentum, how much is behind this.
So what's going to drive it? International investing? Are we going to see institutional investors driving in, or is this primarily a retail-driven experience right now?
I think institutional capital is very close, and I think in the first quarter we saw institutional capital, at least by definition, in the form of institutional hedge fund capital that's not necessarily constrained, is allowed to invest wherever it can. In fact, it's only a function of what their custodial prime brokers will custodize in terms of the shares. So I think there's institutional capital here, but I think the next phase of growth to bring in some of that other capital that I talked about is going to come with a legislative process that a lot of this started for at least re-rating of the assets in the Georgia runoff on January 5, 6 in this country, when we got a sense that the Senate was turning from red to blue in terms of at least where the vote might come for cannabis. Because if you think about 2019 and in 2020, we had major landmark legislation go through the House that puts cannabis on a legalization schedule that would allow a lot of this capital in. So we're not talking about years. I think we're talking about months. If you listen to the rhetoric in the last few days around Chuck Schumer's comments on the desire of this administration and at least this Senate, and as the Senate Majority Leader, to get some legalization, some legislation in place for cannabis that at least doesn't have to necessarily decriminalize it on a federal level, but will the federal government will allow the states to decide what they want to do and allow it to be legal state by state. And that would allow in a lot of capital. It would allow investment banks to bank the sector. It would allow custody banks. It would allow exchanges to list some of the biggest U.S. companies that have been forced to list in Canada. And the great irony is that some of the less interesting Canadian companies, I say less interesting because I think their addressable market in Canada is obviously much smaller than it is in the United States. There's some great companies. We have a lot of, we have strong conviction from as investors in a handful of those companies. But to be clear, it's been with great irony that Canadian companies have been able to list in the U.S. and U.S. companies have been forced to list in Canada. And that's kept some of the institutional capital out.
So there's no getting around the fact that your ETF has outperformed. What's driving that performance today?
I think I'll say three things. One, I'm in this industry every day. I'm talking to companies. I'm talking to management teams. I've been considered a thought leader in cannabis, but I've been a participant in this industry for 5 or 6 years. One of my other jobs is people see me on CNBC. I started talking about cannabis as an investment destination for capital, as an allocation years ago, because as someone that was a portfolio manager and spent a good chunk of my early career investing in emerging markets and in emerging asset classes, this made sense to me. A lot of the top-down macro that was a legislative change that allowed investability, some of this is not a lot different than what we saw investing in local markets in China or in Russia or Brazil. So I started talking about the industry and, back to, look, I've been in the middle of the industry. I have relationships with the industry, but more importantly, I'm talking to these companies, to these folks that are in touch with the regulators or with the regulators or other thought leaders or investors within the industry. There's a group of folks. I think the intelligence factor, and I mean market intelligence, is high for those that are plugged into this every single day. The other dynamic here is, so again, we've talked about my involvement in the sector. We've talked about my involvement as a portfolio manager historically, someone that's managed money in new asset classes, of which there's a lot of the same characteristics. Finally, our strategy is active. The cannabis sector is evolving quickly. M&A, new IPOs, of which we bought 2 IPOs in the last couple quarters that were, we were there for the opening allocations because they're companies we had followed from their earlier days. They were companies where the management team knew us. So being active to respond to the IPO calendar, the M&A calendar, corporate governance events that might be negative, where you don't want to have to wait for a rebalance, or you want to be able to be proactive. Active as it relates to the evolution of the subsectors. We own a couple SPACs in the portfolio. Everybody knows that SPACs have been a big investment theme. So being active in this sector, I think is critical. I think it has a lot to do with our ability to be more nimble and to navigate. And yet we are thinking thematically. We are thinking long term. We are there to be that exposure for advisors and for investors, that they know, hey, yeah, I get that the cannabis story is early. Yeah, I get the story. It's a consumption story. I want to be a part of it. I see the growth. How do I do that? So we're trying to be efficient. We're trying to be tax efficient. It's not governing what I do, but being active, I think, gives us the ability to be responsive, proactive, and evolve with the industry.
Yeah, Tim, I would have to think with any industry that's evolving, active management is almost a necessity, given how quickly things evolve. Sounds like you're including IPOs and SPACs. Let's go a little bit deeper on that. Could you talk about one of the IPOs that you've had in the portfolio recently?
Sure. I'll talk about 2. About a month ago, we made an investment in a company called AFC Gamma, and they are a cannabis REIT. And they're a cannabis REIT where, again, having a lot of familiarity with the portfolio and the pipeline of loans and the companies that have been essentially underwritten by, essentially by the folks at AFC. That's a deal we were waiting for. It's a deal we were waiting for that we see not only as a cannabis deal that's exciting for the evolution of the industry and the sophistication of some of the financial and the access to capital that a lot of these companies haven't had. But my sense was this was a deal that was going to be interesting to investors outside of cannabis. investors that are investing in REITs and investing in BDCs and have a sophisticated approach to understanding the yield profile of the credit markets outside of cannabis, understand the huge opportunity for credit within cannabis. So investing with a company that I think has been drilled down, does understand the creditors that they're lending money to, understands the collateral that they're taking in return for those loans and where they sit in the cap stack. It was a very interesting deal for us to be a part of. A name like Hydrofarm is a hydroponics retailer. And again, a case where, yeah, a cannabis specific story as it relates to their enormous growth and the opportunities that we see. But if you think about what's going on with food safety and what's going on with hydroponics outside of the cannabis industry, also a company that is in some sense re-rating outside of the industry and has appeal to investors that are investing in these themes outside of just specifically cannabis. Weedmaps is a SPAC that was brought by a company called Silver Spike, who are I think a sophisticated group of capital markets, private equity, and credit guys from their pre-cannabis days. In fact, one of the founders of the firms is someone that I know of from his emerging markets days at Credit Suisse, et cetera. So when they put the SPAC together, I think for SPAC investors, the reason you're investing in a SPAC is not just because you have an expectation someone's going to get a deal done, but you have to have some expectation that the sponsors, the folks behind the SPAC, are high quality folks that are going to find the right deals. And in this case, they found a company called Weedmaps that I would call the DoorDash or the Yelp or some combination of them of cannabis. And as we think about the evolution of where these trends are outside of the industry and the multiples that are being put on companies like a DoorDash or even the delivery component of Uber or some of the things that have been very exciting investment trends, this is another one of those names that we're really excited about in the portfolio.
As we sit here with the first quarter in the rearview mirror, what do you see unfolding the rest of the year in the space?
I think it's a combination of digesting what really have been an incredible run of fundamentals for the sector. And if we think about, yesterday was 420, which is a landmark day within the industry. It's become a bit of a focus day in the industry. And to take a snapshot of where the industry is in terms of the macro, both legislative, addressable market, globally, where things are in other parts of the world, an incredibly different and stronger story than it was even in 420, 2020, not just because COVID was really front and center and early, but because of really where we've gone with the perceptions and the legislative calendar. But again, the size of this marketplace globally and especially in the US is bigger. What's more interesting is possibly where we are now from a profitability perspective from within the industry. And if you think about where companies were a year ago or 2 years ago, the profitability of companies within the cannabis space is that much more exciting right now. So cut to where we are now, and as I look to the rest of the year, I think there are more legislative and macro catalysts ahead of us. They include more discussion from within the Senate majority and where we expect to at least have a better timeline for this legalization of cannabis. The second is I think there are more companies that are either coming to market and going to be new opportunities to invest based upon businesses that didn't just pop up yesterday, but maybe are coming to capital markets now. And there's a few that are on our radar screen. But I think the consolidation within the industry is also fascinating. We're seeing some of the bigger players either combine forces or be opportunistic and buy up other assets. So look, as I see the market on April 21st, we're 25 to 35% pulled back from this extraordinary mid-month February highs for the industry. So tactically, with the fundamentals that have gotten better and yet a pullback that I think was a function as much of as people selling the fact, tactical hedge funds that came and went. The fact that I talked about, we still are looking for more follow through from institutional and longer term capital. I mean, these are the things that get me very excited about the rest of the year. I'm not going to tell you that there isn't volatility. There aren't plenty of different dynamics that on a bottom up basis that different companies have their places to be concerned about what could happen in their own businesses. But I think the industry overall, the theme that folks are ascribing to cannabis investing as being the next great sophisticated consumer product story is ahead of us. And tactically, you're looking at it right now at a nice pullback from the levels we were at earlier in the year.
Excellent. Tim, we appreciate your insights. For more information on the ETF, please visit amplifyetfs.com/CNBS. Thanks, Tim.
Thanks, Jay.